Hello guys, welcome to a Trading Parrot. Although Ethereum on the weekly time frame is doing what looks like a retest of a breakout bullish to the upside with further continuation, it is on the daily where I have my doubts on how high that can get right after here. In this video, I'm gonna show you those patterns. I'm gonna show you whether we can hit the resistance, and by doing only that, maybe hit the largest liquidation pools at the top. After all, if we can align the motivation to get there with a proper technical setup, we might as well do that continuation of the uptrend straight away. We'll cover some news as well, and we'll look into on-chain to see if there's healthiness around there. I have a little bit of worries that I want to share with you, particularly if you are looking for scalping and swing trades. That's possibly going to be important. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes on Ethereum? That is actually in the past weeks taking the lead in terms of ETFs accumulation on spot. We should look into the Ethereum dominance as well and the Ethereum against BTC pair. Why not? So let's start with the weekly. What looks good at the moment is still the weekly. We haven't necessarily broken structure or anything bad with this recent price action. What we have done so far in here, if we just focus on that, is to discard a huge event like this. For example, on 16th of December, after the move from the second wave in here, we put 3 weeks in the green, we hit the 4K, and right after that, we got an ugly rejection that within the same week moved 1,000 down. So let's put that in perspective with what we are seeing in here. We came from the lows of 1,400, we have the first wave in here, we have a retest of 2.2, after that we have 1, 2, 3, 4, 5 weeks in the green. So we really deserve a little bit of a pullback. We called for that pullback. I was distributing my Ethereum between 3.5 and 3.8, and we got the pullback. The pullback at the moment looks really sexy because it's actually making us think that this is a retest that could bring another wave up. After that, after all, this is a 1, 2, 3, and after a 3 is not good enough. We need to get into the fifth one to say, well, this is really turning bullish. So here with this move down so far, this damage is way less than this damage in here. Again, that is over 1,000 candle down, and this is barely 600. And that is positive because we are also doing it right around the support. Now, this week and the upcoming week are gonna have the biggest responsibility when it comes to Ethereum. And actually not just Ethereum, but actually all the altcoins, because altcoins are sitting behind Ethereum on the expectation that Ethereum is gonna behave. Why? So there can be a rotation from Ethereum into top market cap altcoins and then the lower cap as well. If Ethereum starts breaking these levels on a weekly candle close basis and we start going into the middle of the range, things can turn into the gray area. On the other side, we have managed to do something very significant. Despite the fact that we pinched this level that was supposed to be a revenge rally and stop at 65, we went too far in here into 71 almost. We came back down and we lost that level. So that is kind of the that's not great, but we need to also highlight the positives. We took the highs from December 9th. The RSI at that point reached 67. Now we reach 71. That's beyond 70 as well. And of course, traders that look for signals, oh, RSI managed to get above 70, maybe it's gonna get sticky, stay around that area and try even higher levels of RSI. And look at the lows. The lows are barely 62 so far, very far away from our area of consolidation of 52. So that means that there's still a lot of headroom to say this is still healthy, right? You could even argue that this can get into 55 around here, and we are still in a very healthy uptrend. So I guess I managed to convince you that the weekly is fairly healthy still. Just to wrap it up, the longs versus shorts after the breakout in here has come straight to that line of the breakout. So holding that level in there is the best that we can hope for continuation into the top of the range where we get all the longs at the same time betting on the same side. At that point, we need to be distributing Ethereum. If we are not, well, that's because we really are calling for a red back for the bear market. In terms of socials, things are continue to be quite quiet in this area. Look at this this pattern as well. We used to be always over 14%, but now we've been calling the attention in social dominance below 14 and even as low as 1% of all social dominance, talking about Ethereum. Let me see what was going on with the price at that point. The price at that point was 2.4k and no one cared about Ethereum, and it made all a move of 1.6k up at that point. Always when things get very quiet in confluence with other indicators is a great call to go long. Let's go into the daily time frame, and I think we need to pay a lot of attention to this time frame. We cannot just consume all the sugar that is coming from the weekly where things are looking really great, but if we zoom in here, you're gonna notice that by the end of July we had a breakdown. Okay, that's not a big deal, but it kind of gained a lot of speed in here. It went into 49, so upside down with the weekly. In the daily is where we are not seeing a lot of healthiness. This could turn just into a bull flag. This is still, okay. We broke this low of 35, getting into the 3.3k. Now we have a neckline around here. We could place the neckline like this in a more optimistic way, because that means that we still have headroom to go up before we hit that resistance. If we put it at the lows of the candles, then we are right now hitting that resistance. So there is a band there of resistance on the daily, and if this RSI meets with this resistance, it's gonna do it at an RSI of 70, which I think I already calculate. Let me go in here. Let's put this at around 70 and let's drop this to the daily time frame. That can bring the price into 4k, $24. It's a moving target, so if we start gaining speed in here, we might meet with the target somewhere in the middle, so don't consider it written on stone. So getting into 4k around this area, we still don't have enough steam to crash the 4.2, where we find all those heavy levels of liquidity that were accumulated with these 3 times that we peak at the top from before. We really want to get there. We really want to use all the area from 4.2 into 4.6 to do more heavy distribution and leave just a little bit for price discovery if we get that. In the community, we are trading, we are not investing. So if you think, well, Ethereum can get into 10k because there is a case for that, fundamentals and all of that, we barely touch the fundamentals of coins. We are really focused on trading and using data to enter and exit. So by hitting that resistance in here of 70, we cannot get there. I think we can do it intracandle. That's another alternative. Let's say this gets there and pinches intracandle there and it gets rejected below the resistance. That could be enough to stretch the hand, grab the liquidity and stay below resistance, respecting the current channel down on the daily. We do not have that on the weekly, but within the week or within the next couple of weeks, we could stay in a bearish trajectory in here, in line with the seasonality of August versus September being one of them bearish. We have the point of control in the way as well, that is 3.7k. Watch out for that level. We have the 3.6, which is the bottom, the support of this flag. That could be one of those 2 levels, could be a level that acts as resistance for continuation down. After all, if we focus on this, let me hide the volume profile. This is a double top with a higher high in here with bearish divergence. It's evident, and it's got the neckline at 3.6. If we place it like this, we get a target of 3.3. We have been already at 3.350, so the full technical target hasn't been achieved. If we place the neckline more like that, we're gonna get a target slightly lower, probably at around 3.1. I think I already did the calculation. It's 3.1. In the short term, I will expect Ethereum to have a little bit more of relief in here. Within the week, we should have a few candles that meet with this yellow line. At that point, we can bet either on a rejection and continuation to downside, or we can start saying that we can get a breakout. You know my preference. I always prefer channels to fully develop before trading them. I like accumulation levels like this, build a position and start coming back up. I think this was great, but my worry about accumulating Ethereum just now is that this could pinch here, but then we are in the context of a channel down, so maybe the upside is not as good. And also over the weekend I have a few events, so I couldn't really trade that much, but I'm not that bothered because I consider this move down in here should stretch a little bit more with higher likelihood, not with full guarantees in here, of course not. Looking at the 1 month liquidation levels for Ethereum. And what we just hit in here by breaking that neckline and now with meeting with the same neckline from below is just hitting that liquidity there, which is very, very low liquidity in terms of longs being liquidated. I think their risk at the moment is between 3.1 all the way to 2.7. And of course, I do not want us to get there, but we need to think about it. You know, we need to do the homework. Let's see on the weekly what could happen if we get there. The 2.7 is perfectly this ascending line. And you can see how often we use this. We use it in here in June 2022, December, then, you know, there's a gray area in here in September 2023, all the way here respecting the line. Here we respected once, but we lost it in a very ugly way. Right after that, we reclaim it at 2.7. And if we were to come to hit those liquidations, that level is a very interesting one. Do not be disgusted about talking about levels so low. I am not, because I already distribute 2/3 of my holding on Ethereum. So if we get there to an area that is a prime golden entry, why? Literally is the golden pocket of this expansion. From this move 2.1 into the 2.9, if we come back in here to 2.8, we are literally inside the golden pocket. Is it for granted? No. But if we do get there, it's a great opportunity because there is a confluence of the white line with the golden pocket. Unfortunately, there is not a lot of structure there. It's a slippery area. You can see that there is a depression in volume. So the support we could say is 3K, and then right after is 2.5. So if we get in 2.8, ideally we want to do it with a wick down and then come back up into 3K and hold that 3K. 3K is definitely going to be a psychological level to keep the bulls still in the game. Getting into 2.5, we lost the white line again, and that could bring huge fears that that was it, that we are not really gonna go anywhere beyond 4K. Looking at on-chain on crypto quant, getting some exposures to additional data points. We have in here the spot taker, the future volume bubble map overheating, and the futures taker also in taker sell dominant. Taker sell dominant, it means that aggressive traders are preferably selling. They're not aggressively buying at the moment, they're aggressively selling. And let's have a look at the futures volume map in the chart to see what it looks like. So the last time that we were like this on Ethereum, we were priced at 2.6. That belongs to the area where we were just going sideways. We were in bubble territory in here, and we retest back into 2.1. Let me see if when we did that, if we did it also in the golden pocket, because history tends to repeat. You can see in here with the highs of 2.8, we bounced from the golden pocket at 2.1. So, you know, don't think it's too crazy to go just pinch 3K up until 2.8 with a wick. If we do that, that will be an amazing opportunity for buying. Now, let me be very honest. If we get into the lows 3,000, I need to start panic buying and get my Ethereum back. If we do not get there, that cash is definitely still gonna be used, but for other opportunities, because that will mean that I'm gonna potentially miss part of this rally and only ride it with 1/3 of the allocation, which is fine. A win is a win. Remember, guys. Looking at some news, and before I let you go, I also need to do the wrap up. If you want to trade on a non-KYC exchange and skip the hassle of having to do that, which means that you can deposit and trade just in 30 seconds, you can look into Bluffing Exchange. I've been using this exchange for quite a while, and it's great because you can get 10% cashback and up to 3,000 in futures bonuses by using my link in the description. By doing that, you're definitely helping the channel as well. You can win a Rolex priced at $9,000. Of course, you need trading volume to get all of these rewards, but if you're gonna do it in another exchange that doesn't value you that much, you better do it in an exchange that gives you good rewards. We have only bullish news coming in for Ethereum. Ethereum holds over 3.5K after 5.37 billion July ETF inflows. Bullseye 3.941. Next, 300 million well buy offsets 10% weekly drop. A single wallet scooped 80,000 Ethereum off change, shrinking liquidity supply and signaling deep pocket conviction despite recent pullback. That's a 7 out of 10, and a 6 out of 10 only is that active addresses surged to 674,880, over 100 million exits exchanges. Network usage is nearing the 2021 peak, while sizable exchange outflows show investors shifting to self-custody and staking. Both trends support sustainable demand and a potential supply squeeze. So I agree there is upside to be had in Ethereum, but the markets have their own rhythm. And at the moment, we are seeing the weekly looking really nice, very promising, but you need to keep one eye on this potential additional downside coming in from the daily. This just means manage your risk, stay informed, and don't have over-promising expectations. The bullish case could be that we are forming some sort of descending wedge in here. I would like you to be informed about that as well, because that could maybe play out in a very different way. So we got still the same level of resistance at 3.7, and if you get a flash in here into 3.2, or we overextend this slightly longer, be prepared for scenarios like that. Don't be the dude that says, I never saw that coming. This doesn't mean sell everything, but in my opinion, it's always better to be on the side of high likely setups rather than falling in love with an outcome and then just chasing the outcome no matter what. Trading doesn't work when you are behaving like that. Anyways, notice as well that this extension from the lows is calling for the 1618, which is something I've been covering in my videos, and I think that that is still possible. Notice as well that this low in here didn't get any close to the highs, so there is a gap right there, and I'm talking about that because I'm thinking how big is the gap if we leave a gap in here going to be. At the moment, the gap is from 3.3 into 2.8, so that's a 500 gap. This gap was 2.1 to 1.8, so this was a $300 gap. In both extensions, both impulsive waves were pretty bullish in my opinion. So the way I'm handling this is by having still 1/3 of my allocation to catch being wrong. Basically, you go into 4.2. That is definitely an area where I'm gonna start distributing again. Of course, I'm doing it just with 1/3, but I'm accounting for the additional risk that is coming in from this pattern. Something I didn't say is that a breakout from here, it is a low quality one. We are breaking out from 70 already in a channel down, which could turn into a fake out more likely than being really something that holds those levels for very long. I hope you appreciate the video. If you do, hit the like, write down a comment down below, and continue supporting these additional videos about altcoins and the way you are doing, and I will continue to do it. Thanks so much. Bye bye.